Welcome back to my YouTube channel, and in today's video I will be giving you an example of a top-down analysis or a multi-time frame analysis. And just for the sake, I will start on the monthly. And if you remember what I said, the first thing you want to be doing on the higher time frame is looking for recent market structure breaks. So right off the bat from here, I'm going to mark a break, but I'm also going to mark these equal highs out here as they were liquidity. Boom. So now I know that my trading range is this right here, from this high to this low right here. Okay, so that is my trading range. Now focusing in on my trading range, are we still in a premium or are we in a discount? And looking at what I can see, I've seen the market pull back down, so we're not in a premium. So at this point we would be neutral until we have direction. So I'll get my fib and then I would draw like that. As you can see, we crossed the 50% line. We are in a discount. What are we reacting off of? We are reacting off of this fair value gap right here. As you can see, all candle bodies are closing above the fair value gap. So let me get rid of the PD array. Alright, so on the monthly time frame, we have established that we are in a pullback and currently rejecting off of this fair value gap, and we are below the 50%, so we're in a discount. This would be good area to look for buys. So for the monthly, I'm done. I have drawn my bars for the monthly, which is bullish. Then I will move back down to the weekly. Okay, so now on the weekly, what am I focusing on? I'm looking for recent market structure breaks again. We have one right here. Are we in a premium or a discount? Let me just establish our trading levels right here. So trading range high and trading range low is right here. Okay, so within this trading range, are we in a premium or a discount? I see price came to a discount. What do we have? We have, well, for those that want to visually see that we're in a discount, let me just quickly draw this again. So as you can tell, we're below the 50, which is this. So all this is discount. We're in an extreme discount actually. What are we looking for down here? A couple of things that we could draw out. Because I usually focus on fair value gaps, I'm going to start with that. A couple of things we can draw out is this fair value gap right here. I'm not so sure if that is even 50% or above. I'm just gonna eyeball it, and we do close above the 50%. Then second thing, for those that use order blocks, we have one right here. This is very large order block. That one there, I can just let me do this to this real quick. And then just call it OB. So that's an order block. Are we 50% of the order block? Let me just see. we do close slightly below the order block, but then the fair value gap is your second sort of like backup. So I would consider that order block being valid because of the fair value gap. Okay, so we understand that we push back down into a discount. What else did we do? Just off of the same time frame, I'm just going to get rid of the order block just to clean the charts up a little bit. Just off of the same time frame, we did have a market structure shift right here. So I'm just going to draw that out. Alright, and then I'm going to move down to the daily. I was actually supposed to draw that market structure shift on the daily time frame, but that's fine. Okay, so on the daily, what do we have? We have recent market structure break right here. So our trading range is here. Okay, and then the low of the trading range is right here. Alright, so that's what we want to be focusing on. Where are we within this trading range? If you pay attention to this area here, we had a gap. So price came back down and filled that gap. Alright, we did wick below the gap, but we closed within the gap, so that's good enough. And then what else do we have? Do we have a break? Let's move down to the 4-hour just to see if we have any breaks on the 4-hour. And on the 4-hour, we do have a break of the daily, the previous trading range over there. So our new trading range now is this one right here. And the low of the trading range is down here. Okay, so within the trading range, do we come back down to a 50%? What do we follow? We have a breaker right here, a breaker block. Remember what I said about breaker blocks? I said I am aware of breaker blocks. I just don't use them for entries. And this is a perfect example of me being aware of a breaker block, as I would have loved for price to get down into this area, into this fair value gap, to give me a little bit more discount. But because of the fair value gap, price did not get down into, actually it did, it wicked into it, but just not as deep as I would have loved it to. Alright, so I'm just gonna get rid of this so I don't confuse you. Then do we have a break? Yes, we do have a break. So our new trading range is from this low to this potential high right here. Alright, so I have just gone through a top-down analysis on bias, or how you could draw a bias. So I started from the monthly all the way to the 4-hour. Anything from 1 hour and below is like entry time frames. Okay, so essentially what I have just done is looked for trading ranges from monthly all the way to the 4-hour. Now I usually start my analysis on the daily because I don't need to start on the monthly. All I need to know is what is the most recent break or shift in market structure. So if I hadn't done all this other analysis, the first thing that my eyes would have been drawn to is this shift in market structure here, because this is what I want to be concerning myself with, and this is what gets me as close to trades as possible. Okay, So like I said, on the monthly, I said I was bullish, and we can tell that we are still bullish as we keep breaking and creating new highs, okay? But where is our target on the monthly time frame? My first target would have to be this right here, because we do have a gap right there, so I'd like to see for price to get out into that gap as well. Okay, then after that I would have to see what the market does. We also have suspicious highs right here, so I'm just gonna draw this right like that. These highs look a little too suspicious, a little too relatively equal in my books. Where is that? If I can't find it, I can't find it. I am so used to using the PC for these symbols. Is it in emojis? Yeah, no, I can't find it really. But anyway, you get it. This is liquidity up here. Let me just change the line to color to red so you know it's liquidity. Alright. So that's your liquidity level. So those are your targets. You would want to see price come into this. And if we disrespect this gap, we want to see price reach for these equal highs. On the monthly, let me take you back to the monthly. I also want you to take note of this. We have a fair value gap up here as well that we are currently heading up to. Look at how these equal highs here are 50% of the fair value gap. Alright, now I do trade I trade EU a lot, so I'm always looking at the DXY, so forgive me if I might be all over the place, but the normal sequence would be higher time frame, look for recent uh, market structure breaks in price, then look for where the market is. The market was currently in a discount, which is here. After you figure out that you're in a discount and are rejecting, you start to look for possible targets for where the market could be drawing to. So these may be fair value gaps, equal highs, equal lows, or gaps. So in this case, we had already tapped into this, but we had left on the lower time frame, we've left equal highs. So where we're possibly heading could be possibly heading back to clear those equal highs, or we could possibly be heading back up here as we are breaking previous highs. Okay, so that's why I said on the monthly I am bullish. Let's go to the weekly. On the weekly we broke highs, so I was bullish. Let's go to the daily. On the daily we broke a high, so I am still bullish, though I should be anticipating a pullback. And on a 4 hour, still bullish. So let me just get rid of the monthly fair value gap. Now, once you get to this point where you understand that you are expecting a pullback, this is where now you start to gauge entries. So I'll move to the 1 hour. So the way that I personally do this is I have seen an untouched uh, gap here, but then we have lots of inefficiencies here and relatively equal lows right here as well. But I would say this got wiped, so my focus is this right here. So on the 1 hour, I would be drawn to that, and then I would also be drawn to this breaker. It's just a backup plan because we do have fair value gaps at the bottom. We do have an inverse fair value gap right here. So an inverse fair value gap is just basically where you have a fair value gap on the other side like this, and then you also have another one on the other side like this. So you drag it out from that wick, then just drag it out like that. So if price were to come back into this, then this would be would balance out. Okay, so that's what I'm looking at. So now this is where you let your brain run crazy. So I would be expecting, if I, because I'm still bullish, I would be expecting maybe Monday, Tuesday to come back down into here if that does eventually happen. So Monday, Tuesday, or Wednesday, we sit in this fair value gap right here. Then I know Thursday, Friday, or Wednesday, Thursday, Friday, depending on when we create the low, I know we'll be heading for this. But we could also have a situation where, because we had such large range days this week, we could also have a situation where we do Monday, Tuesday right into the gap, and then Wednesday, Thursday, and Friday back down into uh, taking these lows, and then back down into these fair value gaps right here. Both of these scenarios could possibly happen, but that's why I always have two scenarios. And with my trading strategy, I have to wait for Monday to play out for me to understand which way the market will be going for the rest of the week. I also have to be aware of Wednesday, because sometimes it will get a midweek reversal. Alright, just excuse that ad. My service provider keeps sending me weird ads. Nobody even uses those things anyway. Okay, so I think I am done with the top-down analysis. The 1 hour will just give you what you want. Anything from here is an entry. So the entry is the same thing. You just look for market structure shift. I use weekly profiles for trading, so I can't really explain anything below the 1 hour unless I explain or introduce the weekly profiles to you. Then you will start to understand how you can further proceed with this top-down analysis. Okay, so I think I'm done with this video. If you found it helpful, please remember to leave a like, subscribe to my channel, and I will see you in my next video.